thank you for joining us today on Realty Check. I'm your host, Trish Williams, and we're in part 6. I know last week I kept on saying we were in part 6 of 7, but I was wrong. Today is episode 6 of 7 of our financial series. And we're going to be talking about something that I know there's so many people out there in need of, and that is bridge loans and what they are. We have our guest with us today, Jaymie Butler Taylor of Guild Mortgage. Thank you, Jaymie, for joining us.
Hi, thank you for having me today.
Okay, great. And Jaymie, your company has a great new product called bridge loans. I just want to give the audience an idea of what that's used for. A lot of people right now have homes that they own and they're living in, and obviously with the market being so intense right now and equities going up, a lot of people are sitting on a lot of equity in their homes. They want to purchase a new home. However, the fear is that in making offers to purchase a new home, to be able to sell your home and purchase the new home using the equity in your home for the down payment, etc., is that when they're making offers contingent upon sale of their home, with as aggressive as our market is, they're just not having any success with that. Those offers are getting rejected because it's too many contingencies or too much risk for the sellers on the other side, which have their own issues that they're dealing with. So people are wondering, how do I get the equity out of my home and be able to move on to a new home and purchase that home without having to do the contingency? And for some time there was no options for that, but now there is. So tell us about bridge loans. What is a bridge loan?
So a bridge loan is a really unique product that Guild Mortgage is the only one that has. And what it is, it's bridging the gap, but literally between your old home and your new home. What we're able to do is take the equity out of your home as another loan, and you're able to use that for down payment and closing costs on your new home. It's a short-term loan. You're just making the bridge from the time that you purchase the new home till the time you sell your old home. So it's a very short-term loan, but it gets you in, and then Trish is able to write those offers without it being a contingent offer. So you're able to have the faith from the seller of your new home that you're going to close this, as well as taking the pressure off of you that how am I going to do all of this so fast?
Right. Another thing that I know is a huge concern for people when they do a contingency, doing contingent upon sale of the home. What if last minute their buyer backs out? Then not only do they have to go back on the market with the home that they're selling, but they lose the home that they're buying. And in many cases, they lose their deposit if the time frames have lapsed. So there's a lot of risk there. So this basically eliminates that risk.
Exactly. It eliminates the risk. It's really for the well-qualified borrowers who don't want to put their earnest money at risk. Maybe you're moving up in house size. Everyone's working from home. Everybody wants offices. We totally get that. Maybe the kids are out of the house and you're trying to downsize, but your money is truly tied up in that equity in your home. So we're able to use that and leverage it so that way you're able to get into that new home without risking your savings that you've got put aside.
That's excellent. And Jaymie, you had mentioned that this also includes closing costs?
It does. So the closing costs, there's the typical cost of doing a loan with this, things that you should be aware of, like an appraisal. We're going to have an appraisal on the home that you're leaving to make sure that you have the equity in it. There's going to be title fees and there's going to be recording fees, just typical loan fees that go in with it. However, you're not going to pay anything out of pocket. All of that is actually going to come from the proceeds of the bridge loan. So yes, there's fees involved, but you're not having to pay for it up front. Again, it's keeping the money in your pocket so that way you're able to protect yourself and get into your new home.
Wow. So this bridge loan is actually more than 100% financing.
It's the equity taken out of your home. So we run it much like we would a cash out refinance or even a regular refinance where we just finance those closing costs right in.
Okay. Perfect. And who do you think are the best candidates for this loan?
So the best candidates for this loan are people, obviously, who are already homeowners, who are well credit qualified. Okay, so we're looking at the higher credit scores. There is some risk involved on the lending side of it because you're going to be owning 2 homes at the same time. So we're going to be looking for credit scores that are above a 720.
Okay.
And we're going to be looking at a maximum loan to value of 70%. So that means you have to have at least 30% equity in the home that you're leaving in order to qualify. And then your debt to income will max out at a 45%. So that one's a little bit lower than what we see a lot of times, but the loan to value is 45%. Totally doable for a lot of people.
Right, absolutely. Absolutely. And it sounds like, if that's your scenario, if that's the case that you're in, this is definitely, it's almost a no-brainer. If you want to move, this would make the most sense. So you said that they need 30% equity in the home that they're selling, or their exit home, the home that they're pulling the bridge loan from.
Correct. The maximum loan to value on that loan is a 70%, so you have to have at least 30% equity in the home. And we figure out what your equity is. By all means, Trish and I are going to have a big conversation up front about how much we think is in there, and then we're going to have an appraiser come out and give their opinion of the value of the home as well. So that way, that's how we figure out what the equity is in the departing primary.
Oh, okay, perfect. So, and a lot of people these days, I mean, there seems to be more homeowners right now that have really strong equity than we've seen in the past years.
Yes.
By far. The homes are selling at, at really great values, and sometimes above what they're appraising for. So
Absolutely.
it can definitely put you in a better scenario. So back to credit score 720 and above.
Correct.
Okay, all right, that's good. So I'm sure that you guys initially, the pre-approval process starting off is probably a little more in-depth than traditionally.
It will be. It will be a little bit more in-depth, but not terrible. So we are going to definitely get all of your documentation up front. Some of those waivers that we're able to get on other programs, as you guys, I'm sure, know, sometimes we don't have to ask for your pay stubs or W-2s or bank statements because we have other options to pull those in from other places. This program is going to require all the documentation up front. We really need to make sure that you are going to qualify for everything. So
Right.
It's a little bit.
So is this one of the scenarios where you would go into underwriting, I guess a quick underwriting review before actually shopping?
So that would be a potential option. We don't have to do that, especially if it's a very, very well qualified borrower, a super low debt to income where we're very confident. But if things are getting tight, it's all about protecting you as the borrower. We don't want to put you at risk. So if we're up against, a high 44% debt to income or something like that, we're absolutely going to go into underwriting. We're going to protect you so that way you can actually get into the homes that you want.
Right. And when they get a pre-approval letter, so when they have their letter, once you have this whole package put together for them, they're ready to go shopping, they get this letter. Is it a regular pre-approval letter? Does the seller have to be notified of the type of loan that they're doing? What is it that they're out shopping with?
So you're going to get a regular pre-approval letter. This financing does not affect the seller in any way, shape, or form. So the seller does not need to know about it. So this is between you and us, and obviously your realtor. But again, this is very similar to doing a refinance, and the seller would not need to know that you're doing a refinance on your home, just like they wouldn't need to know that you're doing a bridge loan. They don't need to know where your down payment's coming from. All they need to know is that I verified you have it.
Yeah, all they need to verify is the funds there, because on their end, everything's going to check off and go through the same exact way. The seller's not taking any additional risk by accepting your offer, doing this type of loan.
Yes.
Okay, that's perfect. Now, what about the exit home? Obviously, the intent is to sell this home that they have, that they're pulling the equity out of. How long do they have to get that done?
So that's a really great question. That's really important. One of the things that has to occur is the home has to be listed on the MLS before closing on the bridge loan and the new home.
Oh.
The other piece of that is you have 6 months. So just because it's listed doesn't mean it has to close tomorrow.
Okay.
You have time, and you don't have to, if your your buyer falls out, it's not the end of the world. You have 6 months before you're required to repay that bridge loan in full. You will have interest-only payments for the first 6 months of that loan. On the 6th month, the full payment is due.
Okay, that's wonderful. So another thing that I'm sure just came into my mind that I'm sure people will, question or wonder about, what if the buyers qualified for this bridge loan? They make an offer on the home that they want to move into. Their offer gets accepted. That's a 30-day. Is it a 30-day escrow, or is it a 45-day? Is it a 60-day? How long do the bridge loans typically take?
So bridge loans, we're running them really concurrently. So depending on what the current daily flow is, I'm recommending 35 to 40 days.
Yeah,
So
a little bit longer. I
Yeah.
assume there's a little bit more to the process, so it would take a little bit longer to do.
Just a smidgen longer, nothing earth shattering.
Okay, good. So say they're shopping and they're going to close this home in 45 days. Yet they list their home the minute they go into contract. They say, this home, my home that I'm leaving from, I want to get it listed on the MLS and ready to go. And in this market, we all know it could sell in 5 minutes. They get a wonderful offer. They say, this is the offer I want. I'm taking it. Say their offer is a cash buyer. They're going to close in 2 weeks. Now they no longer need the bridge loan. Can they transition, even though they've already started with this loan in contract, can they transition it to a traditional loan?
Absolutely. We just remove the bridge portion of the loan and we continue with the loan process as we were going. So then in that case, and that would be absolutely amazing for everybody,
Yeah.
because then you wouldn't have any of the additional fees that you would be in there. So you're just doing a regular loan all the way through, and we're already in the process, so that's worked out very well.
Right, so you can shop with peace of mind of going into contract knowing that you're eliminating that risk. You can go move forward, nothing's holding you back. But if the stars all align and everything works out, you still have the option to close it the way that you want to do, using your equity as your down payment and going into just a traditional loan.
Absolutely. And again, you're not writing contingent on that offer that you put into the seller, which is the most
Contingent
important
upon
thing.
sell addendum. Yeah, and so then if that buyer, doesn't close in 2 weeks, or something happens with that buyer, because we all know, oh my goodness, in real estate, nothing is guaranteed till the day it closes, keys in hand. Now we know it's time. So at least you have that peace of mind of knowing that if something goes south, you still have the option to make everything work. It's not going to cancel all your plans.
Exactly. That's one of the securities that you get on your side of it.
Yeah, no, that's amazing. I mean, in this market that we're in right now, it's just such a need, because I feel like one of the reasons why we have such low inventory right now is not only, there's all these buyers shopping, the interest rates are low, there's so much movement in the market, out-of-state buyers wanting to live here because it's more affordable and they don't have to show up in an office anymore, they're working remotely. There's so many things that play into it, but I feel like one of the things is because I talk to a lot of sellers on a daily basis, and I talk to so many sellers that want to sell their home, but they're concerned, where am I going to go? How do I know that my home's not going to sell and I'm not going to be homeless? I know my home will sell. It's like, Trish, I know you'll sell my home. That's not the concern. The concern is, where am I going to go from here? And we're trying to get creative as realtors. We're trying to do lease backs. We're trying to do all these things to secure and make it as easy on the sellers as possible. But in the same sense, there's uncertainty. There's huge risk there. So this really can give them that peace of mind.
Right. It gives you the peace of mind that what if your new buyer falls out? You have 6 months to get another buyer in there. And again, in this market, we're just not seeing houses on the market very often for 6 months. So you have that time. You have the peace of mind. You can move comfortably. You're not going to be as stressed about the move and the buy, and it absolutely gives you a whole nother option of being able to move forward.
And I'm sure there's also a security involved in having the appraisal on the exit home, because we all know, I'm sure like the average consumer out there may not know how it works if they've never been through that process, but we all know we can list a home and sell a home at a certain price, but an appraisal sometimes is a completely different story. Sometimes the appraisals can kill deals. Sometimes they can come in and just throw a wrench in everything. We're back to square one. There's some homes out there that we can basically almost guarantee an appraisal on. There's model matches, there's secure comps, they're exactly the same, there's nothing, but we have an appraisal and it's an estimate of value.
Right.
Like just to, it's a professional estimate of value. And we can never guarantee what that appraiser is going to say when they come in and do the appraisal. But having that done on your exit home prior to moving forward with all of this situation, having that appraisal, it gives you another layer of peace of mind. You already have it, and I'm sure they receive the appraisal, they have it in hand.
Correct.
That doesn't necessarily mean the buyer of their home is going to be able to use the same appraisal, which they're not. I'm sure the buyer's lender is going to recommend that, or not recommend, but require that they have their own appraisal. But at the same time, we have an appraisal in hand. We have some kind of justification or verification of the value of that exit home.
Absolutely. So you're getting that verification up front. I know that you're amazing at pulling up comps. However, just like you're saying, it is an opinion of value, and the appraisers do a really great job, and they work really hard to make sure that they're giving you their absolute best opinion or best estimate of the value of your home. But having that in hand when you're going to list the home lets you know what you should be expecting, and you can also go back, or your listing agent, Trish, can go back and say, we've had this home appraised. We know that it's going to appraise for $460. So it really puts another strength in your situation.
And strength for your home sale. I mean, buyers these days, oh my gosh, buyers are terrified on offering on homes because they want to put in a good offer, but their question is always, is it going to appraise? Or just like, it's a guessing game these days, it's because you want to be competitive. You want to get in your offer strong, but you're still concerned, is it going to appraise? Am I going to find myself in 2 weeks trying to renegotiate a contract price because it didn't have a chance of appraising in the first place? So letting that buyer's agent know we have an appraisal in hand, and letting them know that we have, this certainty also is going to help you so much with your home sale.
Yes, absolutely. I agree with you 100% on that.
Yeah, no, I feel like it kind of foolproofs the whole transaction, which is hard to do these days. I keep on saying it's like the wild, wild west out there.
And if we want to continue to foolproof the whole transaction, we're talking about the exit home, but how about on the new home? If you're able to take enough equity out of your exit home that you're putting down a large enough down payment on your new home, we can potentially get a property inspection waiver, which would mean you may not have to have an appraisal on the new home. So by having this bridge loan, it's really bridging the gap to make it easy on you to get into your new place.
Right. So a lot more certainty, a lot less cash out of pocket. So many times people think, oh, I want to move, but I just don't have any cash in my pocket right now. I have a lot of cash in this home, no cash in my pocket. What about closing costs? What about all the fees? But being able to roll that all into one loan is just such a reliever, a stress reliever. I mean, there's enough stress going on in this market. There's definitely
yes,
a lot of good to know that we have ways of reducing that.
Yes, and that's really what our job is on the lending side. Everybody knows that buying a home is not the most easy thing in the world, but it's our job to try to take as much stress off of you as we possibly can. And again, this is just another way to take that stress off.
Yeah, no, it's amazing. So how long, I know you probably already mentioned this, but I just wanted to clarify it again. How long do you have to sell your exit home?
You have to repay the bridge loan within 6 months.
Okay.
So the home has to be listed. God forbid that something happened and the home didn't sell. We would have to address that. You'd still be responsible to pay the bridge loan back at month six.
Month 6, okay. And when does the exit home need the appraisal? When does the appraisal happen? During the pre-approval process? Does the appraisal happen at the time when you go into contract on the new home you're purchasing? When does the appraisal happen for that exit home?
So the appraisal is going to happen we're going to want it done before we're into contract on the new home. We definitely want to confirm that we have the equity that we feel that we have. The last thing that we would ever want to do is go to the seller of the new home and be like, oops, we don't actually have our down payment. So we would want to have that appraisal done before we got into contract on the new home, so that way we knew how much equity we could get out of it.
Okay, good. So that's always done. Again, more certainty, more security there, knowing that that value is truly what it is. And so they have, when they're doing the bridge loan, there's no down payment they have to bring to the table?
On the bridge loan, there is absolutely no down payment. The down payment essentially is the equity in the home. We're using your current home, the home that you're exiting, the home that you're leaving, as the collateral on the new home.
Okay, so no down payment required. That's amazing. Is it a conventional loan, an FHA loan? What kind of loan is this?
It's definitely a conventional loan. There is no mortgage insurance.
Really?
On this loan, again, because we're pulling it out of the previous home, and you have to have more than 20% equity. People
Okay.
ask me all the time, what's the difference between conventional and FHA? There's a whole bunch of technical things I can tell you about it, but the answer that people are looking for is a conventional loan. Once you have at least 20% equity in the home, there's no mortgage insurance. So the bridge loan would not have mortgage insurance.
Yes, and for people that don't know what mortgage insurance is, not the same as homeowners insurance, completely separate, but that mortgage insurance is basically a security to insure your loan to the institutions or
The Fannie Mae's and the Freddie Macs that you guys hear in the news all the time,
Yeah.
making sure that you are going to actually pay your mortgage. That's what the insurance
It's
covers.
insuring them against you defaulting
Exactly.
in the event that you default. And that mortgage insurance, I mean, on a $500,000 loan can cost you, what, $300-400 a month?
Easily, depending on credit score. For this particular product, again, we're talking about people with better credit scores. But with mortgage insurance is on a conventional loan is based off of credit score, and on a $500,000 loan, it can easily be $400, $500, $600 a month.
Yeah, no, I've seen those mortgage insurance premiums pretty high. Plus, there's an upfront premium that's rolled into your.
That's on a different loan type. That's
Oh,
FHA.
that's FHA.
Yep.
Okay.
So
Yeah.
FHA, you roll it in upfront plus a monthly. That's again another benefit of going conventional. There is no upfront.
There's no upfront premium, and having the 20% with the type of loan that we're talking about today, the bridge loans, no mortgage insurance premium, which is awesome.
Yes.
Yes, very good. And then what other type of fees are associated with this kind of loan?
So we've mentioned it before many times. We have to have an appraisal, so there is going to be the appraisal fee in there. There's going to be a credit report fee. We have to pull credit. There's going to be recording fees. It's still going to be recorded with the county. This is adding another loan. There's going to be any of the title fees that are associated with it. The kind of oddball fee that's in here is there is an origination fee. You don't see very many origination fees around anymore, but this program does require an origination fee.
Okay. And, you know, it's peace of mind. The fees may be a little bit higher than normal, but for myself, if I were in that situation, I were shopping, I would rather pay a little bit, and it's slightly higher, not tremendously higher. I would rather pay that to eliminate the risk.
Right, and you're what you're putting in, you're really getting back out. You know, when we're looking at, yes, you have to pay for an appraisal on your departing primary, but it goes back to, now you know you can definitely ask for your home on your exit home. So it has its value to go that route too.
Definitely has its value. It to me, it sounds like it's worth every penny. Yeah. So,
Absolutely.
Absolutely. So, payments start. So the payments will start on your bridge loan just the same way a payment would start on a traditional loan.
That is correct.
Okay. And then some people might have the fear of having two mortgages, of course. And yes, this will be the case, right? Until
Correct.
the other home sells. But again, with this market, the homes are selling fairly quickly, so you shouldn't have that pain for too long.
Exactly. If you were really expecting that pain, and that's how come we're using this product right now, is that pain is going to be short term. We're going to get you out of that current home. That's the ultimate goal, and we're seeing that in Las Vegas. That homes are on the market for days, not
Minutes. Minutes. That's, right when you press active on the MLS, you got 10 offers. They just don't stick around.
right. So yes, we are qualifying you that you can make both mortgage payments. However, again, it's short term, so we expect you to be able to get out of that stress very quickly.
Right, right. And with that, the, having the two mortgages, if the payments start like a traditional mortgage will start, for instance, just to like give a scenario. So where are we at? We're in April now?
Yes, we're in April.
I don't even know what month it is. No, so we're in April. So if, say you were to close April 15th, for instance, your first payment wouldn't be until June 1st.
Correct. So whenever you get a mortgage, the month that you close, there's no mortgage payment. The month following that you close, there's no mortgage payment. Your mortgage payment's due on the 1st of the next month. So if we closed on April 30th, you wouldn't have a May payment, first payment due June 1st.
Right. So with that being said, carrying those two payments, if the timelines work out the way that they should, you price your home right. I mean, and then some of it does go back to, we need work from you as sellers too. Make sure the home is presentable, make sure that we have access to the home, make sure that, if you get your appraisal at $450, that doesn't mean we're listing it at $500 or $550. We want to be reasonable because we want success in your home sell and we want your home to sell. And while we do a really great job, I mean, I'm just boasting, but I feel like I do a really great job at marketing and selling homes. Thank you. But while we do everything we can, we do need help from the sellers as well. Presentation, getting it ready, getting the home, getting everything, following our instruction, and getting things ready to go on the market. So with all that being said, you have your home presentable, you have it accessible, you have it priced right, you should be having your home sold before that first payment even kicks in.
And that is what our ultimate goal is for you. Again, it's a short-term loan. It's just bridging the gap. So the faster we can sell, or you guys can sell that other home, the better it is for you, the better it is for everybody.
Absolutely. Absolutely. And then obviously when the home sells, when their exit home sells, they pay off the bridge loan and they're done with it?
That's correct. Now you're just responsible for the principal and interest and taxes, insurance on your new house.
Yeah.
So you get
just
rid of
the regular mortgage.
Yep.
Yeah.
So you've gotten rid of your old home, you've gotten rid of the bridge loan, and now you just have the new home to worry about.
Okay, perfect. So it's all done, washed away, no future haunting us about that loan in the
Exactly.
future.
Exactly.
Yeah. That's awesome. That's awesome. So Jaymie, how I know you have some other things that you wanted to mention before we wrap things up today, and you want to start going over that, and then tell people how they can reach you, because I'm sure there's going to be a lot of people that didn't know this was around. I know this is new. This is great news, and can definitely utilize it.
So we didn't really talk about the properties that are covered with it. The properties, it can be a single family residence, it can be a townhouse, it can be a condo. I can't do manufactured homes at this point with this program.
Okay.
But other than that, and it's got to be your primary residence. That was the only other thing. We've implied it all the way through. It's got to be your primary residence, and Guild Mortgage actually has to be the person financing your new home. So we're going to do the bridge loan and the financing on the new home concurrently. So those are kind of the couple things that I have to let you know. This is the mortgage world, so I do have some mortgage information I have to give you on this.
Of course.
So Guild Mortgage is an equal opportunity lender. Our NMLS is 3274. My name is Jaymie Butler Taylor, and my NMLS is 1441663, and I'm licensed to do business in the state of Nevada. The information provided today is for educational purposes only. The positions, strategies, or opinions of the show do not necessarily represent the positions, strategies, or opinions of Guild Mortgage Company or its affiliates. Each loan is subject to underwriter final approval. All information, loans, programs, interest rates, terms, and conditions are subject to change without notice. Always consult an accountant or tax advisor for full eligibility requirements on tax deductions. Guild Mortgage is not affiliated with Trish Williams or Keller Williams Marketplace. So now that we got that in there, we had to make sure that we got that.
I'm impressed at how fast you got through that. That was good. Yeah.
But with all that said, I would absolutely love to talk to you about doing a bridge loan, see if it's the best option for you, see if we can get you into this program and help you and Trish get you into that new home that's going to be absolutely perfect for you. My team is the Taylor Group. We are at Guild Mortgage. We're local. Our office is right across from IKEA, Sunset and Durango. We absolutely love to talk to people. Please give me a call. My cell phone number is 702-339-1667, and we are here to help you anytime that you need it.
Yes, and Jaymie has an amazing team. So I know her follow-up is like if you've ever tried to call a lender and then you just like never heard back or followed up or whatever, that doesn't happen with Jaymie.
No, we promise that we will get back to you and we will help you out all the way through. We hold your hand, whether it's bridge loan or anything, we are here with you all the way through, we promise.
Yeah, her follow-up is good. She will stay in contact with you, and if you have a plan, you're working on credit or whatever it is, or you're trying to work towards your goal, she's definitely going to be there to help you out and stay in contact, and that's one thing I really love about Jaymie. Thank you. And yes, if you are thinking of selling your home and this was your fear, we've eliminated it. Fear's gone. You have nothing to worry about. Let's have a conversation. Let's talk. Let's get your home sold and get you into the home the home of your dreams, right? That gets you moving forward in whatever your real estate goals are. And thank you so much for tuning into our show. Next week, we're going to be talking about how to buy investment properties, how to buy properties strictly as an investment, rental strictly as, profit income producing properties. And this was week 6 of 7. Next week is week 7 of 7, but we are actually going to have a bonus episode, so it's going to be 8. So we had a lot to talk about on this show with financing. So when we broke into the financial series, I thought I had everything covered, and then I realized there was even more out there that we didn't even think about.
There's so much in the financial world, and it's really great because there is so much in the finance world because it means that you can get more borrowers into more homes. And
yes.
That's the most important thing of it. But there's so much to talk about once you actually start getting in and digging through.
I know, and even I realized that. And it is really, when it boils down to it, if you have a job, income, and even somewhat decent credit, it doesn't have to be perfect. There shouldn't be a reason why you can't have a home. Income and somewhat decent credit, and if it's not there, we can work on credit. I've seen people make huge strides in credit. We can get things done. There's no reason why anybody cannot own a home and needs to be a renter. And the truth is, if you're paying rent anywhere, there's no reason why you can't own a home.
Absolutely. And you are the best at getting the buyers into homes. No one writes contracts like you do. You're amazing.
Thank you. Yeah, I like to try to get everybody into their goals. If you start something, let's finish it.
Absolutely.
Yeah. Well, thank you so much, Jaymie, for joining us on the show today.
Thank you for having me.
All right. Well, you guys have a wonderful day. Thank you for tuning in to Realty Check.